Bismillahir Rahmanir Rahim. This side the Allah Haidarim. Today we are going to discuss about the one of the methods of inventory costing. So before going to discuss about it, let's have a quick revision of inventory. That what inventory is. In the simple words, inventory is goods available for sales or stocks available for sales is called inventory. An inventory is current assets, those assets which are used in the business for less than one accounting period or less than one financial year is called current assets. And inventory is also part of the current assets. If you look at the balance sheet of any merchandising business or merchandising company, so you will find one column, which that is the column for inventory, or they write it as merchandising inventories. So simply, students, for the inventory, there are four different methods which the businesses or organizations use it for recording and calculation of the cost of goods sold. Which the first method is FIFO, second method is LIFO, next method is a specific identification, and the last one is average cost method. So in this video, we are going to discuss about first in, first out method. So students, the concept of first in, first out method is, as it is clear from the name of it as well, that those inventories which these are purchased earlier by the business, these are going to be sold first of all. It means first in. Those inventories which are the oldest inventories, these are going to be sold first of all. So the oldest cost is cost of goods sold. What does it mean? Suppose if you have purchased inventory on 1st of March, there is one purchase, and on 5th of March, there is another purchase. If on 10th of March, you're going to sell, so the sales will be from 1st of March. If you're using the method of FIFO. Why? Because the oldest inventory is 1st of March. So simply, students, in the first in first out method, those inventories which we have purchased it earlier, those inventories which are the oldest inventories, or those inventories which they have the oldest cost, these are going to be part of cost of goods sold. And those inventories which are purchased recently, or those inventories which are the newest inventory, they are going to remain as the ending inventory in the business or in the organization. If you have any confusion about the concept of inventory, about the cost of goods sold definition, about the beginning inventory, about the purchase, about the ending inventory, please watch another video which is already available, and that explain the different concepts and the different terminologies which are used in the inventory costing. So students, let's move to the example. So this is the example which we have for method of FIFO, and we are going to solve this question with this method. So this is the example of a company which the name of the company is the bike company, which is TBC, the name of the company or the name of the organization. So here, students, you can see cost of goods available for sales. You can see cost of goods available for sales. On August 1st, beginning inventory is 10 units at the cost of 91 USD, which that is equal to 910 USD. This is the beginning inventory. On August 3rd, the bike company has purchased 15 units with the cost of 106, which is equal to 1590. On August 17, again there is purchase of 20 units with the cost of 115 USD, which that's equal to 2300 USD. And on August 28, again there is purchase of 10 units with the cost of 119, which is equal to 1190. Now, students, these are the total cost of goods available for sales. It means the total number of inventories which came to the business, or the total stock which is available in the business or in the organization. And in the second column, you can see that this is the retail sales of goods. It means this is the total number of sales. The first sales of the businesses on August 14. On August 14, the business has sold the total of 20 units with the price of 130 units. Now, with the price of 130 USD or US dollar, most of the time students are getting confused about it, that this 130 is also the cost. Students, this 130 is not the cost. This is the price. This is the price. It means the amount of money which the business received against of the inventories. Business has paid the inventories, and against of those inventories, business has received 130 USD. Now this is the selling price. This is the selling price. This is not the cost. Do not get confused about it. All of them, students, on August 1st, August 3rd, August 17th, August 28th, everything is on the basis of cost. But this August 14th and August 31st, this is the selling price. This is the selling price. And next one, on August 31st, again there are sales. 23 units are sold with the cost of 150 USD, which is equal to 3,450. Now, students, this is our question. This is the question which we have, and we are going to solve this question with the method of FIFO. So students, the solution which we have for this method, we are going to look at it, how we are going to solve the method, and how we are going to prepare the chart for the inventory costing with the method of FIFO. So let's look at the solution for it. Students, for the solution, like usually this chart or this column, you can use it for recording of the inventory costing in the businesses or in the organization, which here is 4 columns, which 1, 2, 3, and 4. These are the 4 columns that you can write it and you can prepare it for recording of inventory costing. And do not forget, students, that on top of it, you have to write the name of the method which we have used for calculation of inventory costing. It means which method you are going to use. Either you are using the method of FIFO, if you are using the method of FIFO, if you are using the method of average cost, or if you are using the method of a specific identification method. So you have to write on the title the name of it, that which method you have used for the calculation of it. And in the first column, you have to write the date, right? That when the inventory came to the business and when there is sales, or when the inventory is going out of the business. Next one is, students, that we have purchased. It means the total number of inventories which came to the business. And in the next column, we have cost of goods sold, which the abbreviation for it, you can write it as COGS, or you can write it as CGS as well. And the last one is, students, inventory balance. The last one is inventory balance. Now, students, this is the chart. This is the diagram which we are using it for calculation of the FIFO method. My request from every one of you is that please, you have to take a picture of this question, because most of the time students are getting confused that from where inventories came. So it's better you take a picture of this question, and after that you are coming to the solution for it. Now, students, whatever we have, we are going to put it here. In the first one, in the first part, what we have beginning inventory. The first thing that we have, that is beginning inventory. Now let's look at it, that when is the beginning inventory? Students, we have beginning inventory on 1st August. So in the date, I will write it as 1st August, right? 1st August is the date. Now I'm coming to the purchase, that when is, I'm coming to the purchase, that how many units are purchased, right? So 10 units, 10 units are purchased. Students, 10 units are purchased with the cost of 91 USD. 10 units are purchased with the cost of 91 USD, which is equal to 910 USD. Now, most of the time, students are getting confused that Ustad, you told us that in the example part here, we have the beginning inventory. But now when you're coming to the solution, you write it in the column of the purchase. Like, what does it mean? Students, the ending and the beginning inventory, it means this is also part of the purchase of the business. So now this beginning inventory, actually it was the ending inventory of the last year. And this year's ending inventory will be the beginning inventory for the next year. Now students, on August 1st, we have purchased 10 units are purchased with the cost of 91 US dollars, so it's equal to 910. On 1st of August, there is not any cost of goods sold, so what we have, just we have the inventory balance. Now I will write inventory balance here. So how much is the total inventory balance which I have? That's equal to 910 USD. This 910 USD, this is the total number of inventories which I have, or the total stock which is available in the business or in the organization. So after August 1st, students, the second we have on August 3rd. On August 3rd, there is purchased 15 units with the cost of 106 USD. 15 units is purchased when? On August 3rd. So I will write it as here August 3rd, which this is the date, and here I will write the number of units. So students, on August 3rd, we discuss about it, that the number of inventories which are purchased, there are the total of 15 units of inventory. 15 units of inventory, which is purchased with the cost of USD 106 USD, right? With the cost of 106 USD. This is the purchase on August 3rd, that you can see it here, students, that I have taken it from here. On August 3rd, there is purchase of 15 units with the cost of 106, which is equal to 1,590, which is equal to 1,590. This is the total cost. Now students, let's come to the working note, that what we are going to do. On August 1st, the total purchase, or the total inventories which was available, was 910 USD. And on August 3rd, again we have purchased of 1,590 USD. So now we have to add both of them, right? We have to add both of them. 910 plus 1,590. 910 plus 1,590. This is, students, the working note which we have. 910 plus 1,590. So we are going to add the total of it, that how much it is. That now I'm requesting every one of you students, you should have pen and paper with yourself, that you can add it, right? So 910 plus 1,590, that's equal to 2,500 USD. That's equal to 2,500 USD. That's equal to 2,500 USD. Now students, this 2,500 USD, this is the total inventories which we have till this date. The total number of inventories which we have till this date, that is equal to 2,500 USD. Now we have completed the second date as well. Now coming to the next date, that let's look at the next date, that how many inventories we have and how many inventories purchased. Next date is, students, that you can see here. Let's look at the example. Next date is August 17. On August 17, again there is purchase of 20 units with the cost of 115 USD. On August 17, again there is purchased, right? So let's write it here. That first I have to write the date. The date is August 7. Okay, so students, before August 17, that let's look at it, that either there is any sales or not before August 17. Yes, you can see here that on August 14 we have sales. On August 14 there is sales. How many units are sold? 20 units are sold, right? So first we have to calculate the cost of goods sold for for August 14, and after that we'll move to August 17. So now students, coming here, that we have August 14. So in August 14 there is sales. So we don't have any purchase on August 14. Can you see, students, any August 14 here? We don't have any August 14 here, any purchase. There is not any purchase on August 14. So what we have on August 14, there is sales. When there is sales, so we are coming to cost of goods sold. We are coming to cost of goods sold. Now students, our main discussion starts. Now our main discussion starts that what the method of FIFO is. When we said that the method of FIFO is that those inventories which are purchased first, we are going to sell those inventories first as well. Or in the simple words, all this cost is cost of goods sold. All this cost is cost of goods sold. Now, what is our all this cost? Obviously, August 1st is our all this cost. And this we are going to record it in the cost of goods sold. And recent cost, of course, till August 14, the recent cost is the cost for August 3rd. So that is 15 units. So the ending inventory will be from the 15 units. We are using the method of FIFO, students. Do not forget it. You can see it here on top. I have written it that we are using the method of FIFO. When we are using the method of FIFO, those inventories which we have purchased it first of all, we are going to record, we are going to calculate the cost of goods sold of those inventories. And those inventories which we have purchased them later, those inventories which we have purchased them recently, they are going to be in the ending inventories. Now students, the total number of inventories which are sold, let me remind you once again, right? The total number of inventories which are sold, that is 20 units. 20 units of inventories are sold, and we are using the method of FIFO. Do not forget, when we are using the method of FIFO, so we have to write it that we are using the method of FIFO. So how many units we take from the first inventory? 10 units, right? This is the oldest cost. This is the oldest cost. So 10 multiplied by 91. 10 multiplied by 91 US dollar. Now 10 multiplied by 91 US dollar is equal to how much? That's equal to 910, as you already know about it, right? So students, but still it's not completed. Why? Because on August 14 the total sales is 20 units, but only we have taken 10 units from the first purchase, from the first date. So we have to take the remaining 10 units from the second date as well. So now I will write it as that 10 more units are sold. 10 more units are sold. 10 more units are sold from August 3rd, which the total cost on August 3rd is, students, how much? That is, the cost is 106. That's equal to how much? That's equal to 1060. That's equal to 1060. Now students, this is the total inventory which is sold. This is the total inventory which is sold. Again, students are getting confused. Like some of the students, they are asking that also in the question here is mentioned we have 20 unit sales, and that sales is with 130 USD. Then why we are taking the cost of 91 and why we are taking the cost of 106? My dears, because you can see the title, we are calculating the cost of goods sold. But when we are talking about it here, this is the selling price. This is the selling price. This is not the cost of it. It means you purchased bikes with the cost of 91 USD and you sold those bikes with the cost of 130 USD. It doesn't matter how much was the cost of those bikes to us. How much was the cost of those bikes to us? That's it. That's what we are going to record it here. So now students, this is the total number of inventories which are sold. The total number of inventories which are sold. Now let me deduct it, that this is the working note students which we have from for it. So you can see here that when we add 910 plus 1060, 910 plus 1060, I'm requesting every one of you that you have to solve the question with me, because currently I'm doing it with my calculator, right? So 910 plus 1060, that's equal to 1970. 1970. It means the total number of inventories which are sold, the total number of inventories which are sold had the cost of 1970 was the cost of it to the business or to the organization. And how much is the total inventory which we had, students? How much is the total inventory which we had? We had the total of 2,500 inventories. Total inventory was 2,500, which out of 2,500 students, we have sold how many of them? We have sold 1,970 of them, and the 20 units of inventory is sold. So now I'm going to deduct it. That the students, I will write this here. The 2,500 minus 1,970. Again, I'm requesting that you have to solve the question with me. 2,500 minus 1,970, that's equal to 530 USD. That's equal to 530 USD. Now, students, this 530 is called the ending inventory, or this is called as the inventory balance as well. It means out of 2,500 inventories which we had till August 3rd, 20 units are sold with the cost of 1,970, which the remaining or the ending balance with the business is 530 USD. The ending balance with the business is 530 USD. In other words, students, you can see it here that the total number of inventories which we had, that was 10 plus 15, 25 units inventories we had, and out of 25 units of inventories we have sold how many of them? 20 of them are sold. So how many units are left, students? 5 units are left. Now the 5 units which is left with how much cost? With the cost of 106. So 5 multiplied by 106. I'm calculating it. You also have to do it with yourself. 5, write it in the calculator, multiply by 106, that's equal to 530. Now this 530 is, students, the ending inventory. The inventory which is available with the business, or that is the stock of the organization till August 14. I hope till here it's clear to all of you. And please, we are just taking a break for a few minutes. And if there is any confusion, you can review it once again, you can revise it, and after that we are moving to the next steps, right? So we have completed this the inventory till August 14. So students, I hope that tree recording is clear to all of you. August 1st, August 3rd, and August 14th. So now let's look at the example that what is left. An example, students, after August 14, we have August 17. And August 17, again there is purchased of 20 units. 20 units are purchased by the business with the cost of 115 USD. 20 units are purchased with the cost of 115 USD. Now going to record it in the transaction. So we have August 17. We have August 17. So I will write it as here, August 17. And in August 17, we have purchased again. There is how many units purchased? 20 units are purchased. Uh, 20 units are purchased with the cost of 20 units are purchased with the cost of 115 USD, which that is equal to 2,300. That's equal to 2,300. Now, students, on August 17, there is 20 units purchased, and the cost of each unit is 115 USD. Now, this is equal to 2,300. So what we do, well, we are going to add 2,300 plus 530. I'm requesting every one of you to have your calculator with yourself. You have to add it, right? 2,300 plus 530, how much it is? Now I'm going to add it here, students. The 2,500 USD, right? 2,500 USD plus 530 USD. This is equal to how much? That's equal to I'm going to add it here, students, that you also can do it. 2500 plus 530 is equal to it's equal to how much? It's equal to 2830, right? 2830. It means the total inventory balance till 17th August is 2830. This is the total inventory available on hand, or this is the total inventory which is available in the stock of the business or the organization. So students, after 17 August, so we don't have any sales, right? We don't have any sales till August 28. So on August 28 there is again purchase. On August 28 again there is purchase. How many units are purchased? 10 units are purchased with the cost of 119. I'm going to record it on August 28. First of all, let me write the date. Date is August 28. On August 28, students, how many units are purchased? There is purchased of 10 units. On August, there is purchase of 10 units with the cost of okay. So students, on August 28, there is purchase of how many units? 10 units are purchased, and these 10 units are with the cost of 119, right? With the cost of 119 USD, which is equal to 1190. That's equal to 1190. So what we do, students, we have to add 1190 plus 2830. Let me write the working note here, students, that this is the working note which we have. 1190 1190 plus 2830, right? So this is equal to it's equal to how much? Let me add it, that you also should have your calculator with yourself. 1190 plus 2830, that's equal to 4020. 4020, that's equal to 4020. Now students, till August 28, the total number of inventories which are available in the business, or the total inventories which are available in the stock of the organization, is equal to 4020. This 4020 is the total number of inventories available till August 28. So next, now coming to the next, that what is left, let's look at the example. So students, after August 28, there is not any purchase. So we have to look at the sales, that either there is sales or not. August 14, already we have recorded the sales of it. Only August 31st is left, which 23 units are sold with the price of 150 USD. So how many units are sold? 23 units are sold. So let's come to the solution. So students, first of all, let me write the date. The date is August 31st. The date is August 31st. So in August 31st, there is not any purchase, but there is sales. On August 31st, we have sales. So we have to calculate the cost of goods sold. Now students, just take your few minutes and think about it, that how we are going to record the cost of goods sold. How many units are sold? This is now the question. 23 units are sold. With how much cost, right? Which one we are going to record it? So students, you have to look at the question. You have to look at the title, that which method we are using. Obviously, we are using the method of FIFO. When we are using the method of FIFO, so those inventories which we have purchased at first, First of all, we are going to sell those inventories. Now we have to look at the oldest inventories. Which one is the oldest inventories? Obviously, our 5 units is left here. Do you remember this 5 units? We had the total of 25 units, but out of 25 units, only 20 is sold. So 5 units we have, and that is the oldest inventory which we have. So we write it as here that 5 units, okay. So sorry, we have 5 units with the cost of let me write multiply as well. Five units multiply by, okay. So now students, this is the question that the 5 units, which that is the oldest inventory, what is the cost for it? Obviously the 5 unit is this one on August 3rd. So the cost is how much? 106. 106 is the cost of it. So this is equal to how much? 530. This is equal to 530, as already you can see it here. And beside it, students, we have sold a total of 23 units of inventory. So 5 units we have sold it from here, and the remaining we have sold it from the another oldest inventories. Now let me write it as here, students, that how many is left? 18 units of inventory. The remaining 18 units of inventory is sold from here. It is sold from here, right? That 18 units multiplied by, after August 3rd, our oldest inventory is August 17. So 18 units of inventory is sold from August 17. So I will write it as 18 multiplied by 15, which is equal to 18 multiplied by 20, okay. So students, here you can see that the total inventory which is sold, that 5 units we have taken it from here from August 3rd, which 15 units were there, and out of 15 units 10 units were sold and 5 units is left. So we have written it here that 5 multiplied by 106, which is equal to 530, and the remaining 18 inventories are sold from here. The oldest inventory after August 3rd is August 17. So the 20 units which we had here with the cost of 115, out of 20 units, how many is sold here? 18 units is sold with the cost of 115. Now 18 multiplied by 115, 18 multiplied by 115 is equal to 2070. Now students, please add it, that how much it is the answer. I'm going to do the same as well. You also should do it. 530, right? This is the cost of goods sold for the first one, plus 2070 plus 2070, which is equal to 2600. That's equal to 2600. Now let me write the working note here. I will write it as that 4020 minus 2600. 4020 minus 2600, right? Now the end result is, students, minus 1420. That's equal to so students, the total cost of goods sold, that is 5 multiplied by 106, which is equal to 530, and 18 multiplied by 115, which is equal to 2017. Now we have to add both of them, the 2017 plus 530, which that's equal to 2600. Now the total inventories which was available till August 28, it was 4020. Now I'm going to deduct 2600 from 4020. Now the end result is 1420. The end result is 1420. Now students, this is the ending inventory, and if suppose in this year there is not any purchase or if there is not any sales, so this 1420 is going to be the beginning inventory for the next year. Suppose if this is for the year 2020, for the year 2021, 1420 will be the beginning inventory. So students, I hope it's clear to all of you, and this is the process that how we are recording inventories and how we prepare the method of FIFO and what the method of first in first out is. So after this we are going to discuss about the process of journalizing. In the next slides we are going to discuss about the journalizing of them, that how to journalize it. So students, after the completion of FIFO method, that how we prepare the FIFO chart, now we are moving to the process of journalizing, that how we are going to journalize it. So let's look at the example. Students, for the journalizing, what I'm requesting you, that you must know the rules of debit and credit. If you have any confusion, please watch my video that I have prepared for the rules of debit and credit. And at the same time, you must know that in the inventory costing there are two different approach, which the first one is perpetual method and second one is periodic method. So if you are confused about it, that what is perpetual and what is periodic, I'm requesting you that please watch the video which I have prepared on it, and that is compulsory because the full explanation is given. So students, since in this question, that suppose we are using the perpetual method, suppose we are using perpetual method, how we are going to journalize it? As you all know about it, that the perpetual method is a continued process of recording. A continued process of recording means on the date which there is sales on that specific time period, we will journalize it as well. So our first sale, students, it was on August 14. On August 14, we had sales. How many units? 20 units were sold with the price of 130. Now your confusion there should not be any more confusion, that what is this 130? This 130 is the selling price. Only we are going to journalize it. Now students, 20 multiplied by 130, that's equal to 2600. How we are going to journalize it, right? The first one. So students, as you all know, the format of journal, this is the format which we have for the journal. That the first one that we have in the journal, that is a date that we have it, and the second thing which that is particulars, or that is description we have. The next column we have for debit, and the last column which is for credit, right? This is I'm sure that every one of you know about it. Now students, coming to the first date, which the first date is August 14. August 14 is the first date which we have it. So in August 14 we are going to journalize it. So what happens, students, on August 14 we have sales. In August 14, students, we have sales 130 with the cost 20 units are sold with the price of 130. 20 multiplied by 130, that's equal to 2600. Now I'm going to write it as here, that when there is sales, business has received what? Business has received cash. When there is sales, business has received cash. So students, what is cash? Every one of you know that cash is current asset. An increase in asset is debit. So how much cash has increased in the business? With the cost of 2600. With the cost of 2600 USD, cash has increased in the business. With the cost of 2600, cash has increased in the business. And the second one is, students, which we have, that is effect is on the, like this cash has increased from which source? What is the source for cash increase, that is from sales revenue. That is from sales revenue. It means cash has increased from where? From sales. Cash has increased from sales revenue. So how much is the sales revenue, students? The sales revenue is also 2,600. Sales revenue is also how much? 2,600. Now, why we are recording that sales revenue as credit? Because all of you know that revenue, gain, profit, whatever is coming to the business, whatever, if there is revenue or if there is gain or if there is profit, so we will record it as credit. And now, students, since we are using the perpetual method, when we are using the perpetual method on this specific time period, we have to calculate the cost of goods sold as well. Now I will write here cost of, okay, now I'm writing here cost of goods sold. Now, students, as you all know about it, that cost of goods sold, this is a kind of expenses, right? When the all expenses and losses, every one of us know that all expenses and losses are debit. So how much is the cost of goods sold? Let's look at here. The cost of goods sold is 1,970. Cost of goods sold is 1,970. It means the total cash which is received 2,600. Out of 2,600, 1,970 is the cost to the business or cost to the organization. It's cost to the business or cost to the organization, right? Now I will write it as here that 1,970, right? Cost of goods sold. And cost of goods sold, the second one is students. When there is sales, obviously students, its effect is on the inventory. It means inventory has decreased in the business. Inventory has decreased in the business. As you all know about it, that inventory is current asset, and decrease in the assets, any kind of the assets, decrease in the asset is credit. Every one of you know it, right? So there is decrease in the assets with how much? 1,970. 1,970. There is decrease in the assets. Decrease in the assets, every one of us know which that is credit for how much? 1,970. So the second one is students, the next one we have, and that is on August, next one is August 31st. On August 31st, students, again we have sales. So let me write here cash. Again we have sales. So cash is for how much? Now let's look at it. That what was the question. On August 31st, again there is sales of 23 units. 23 units are sold with the price of 150. So 23 multiplied by 150, that's equal to 3,450. Now I will write it as here that cash has increased in the business with how much? With cash has increased in the business with how much? 3,450, right? This is the total cash which has came to the business. From where? 23 multiplied by 150, which is equal to 3,450. Now this is like how we recorded cash. And as you all know about it, as already I explained, that cash is current asset, an increase in current asset, and any kind of asset is debit. Next one is students, its effect is like from where cash has increased. Cash has increased from sales revenue. Cash has increased from sales revenue. Now students, when cash has increased from sales revenue, how much cash has increased from sales revenue? Okay. Cash has increased from sales revenue. As you all know about it, that revenue is credit. Revenue, gain, and profit, that's credit. So that is how much? 3,450, right? I hope the concept is clear to every one of you. Now, students, we are moving to the calculate the cost of goods sold since we are using the perpetual method. Since we are using the perpetual method, we are going to calculate the cost of goods sold. So here I will write cost of cost of goods sold. As already I told you that cost of goods sold decrease, the cost of goods sold is a kind of expenses contra. So now I'm going to write it as that cost of goods sold, as you all know, this is a kind of expenses. All expenses and losses are recorded debit. So now students, let's see that the total sales which we had 3,450, how much was the cost of it to us? The cost of it to us was 2,600. The cost of it was to us 2,600, right? 530 plus 2070, that's equal to 2,600. Now students, cost of goods sold, I will write this here, 2,600, right? That's equal to 2,600. That's equal to 2,600. And the next what we have inventory. We have inventory. So students, what is inventory? Inventory is current asset. Every one of us know. And decrease, current assets has decreased. Suppose before we had assets with the cost of 2,600, but anymore we don't have assets with the cost of 2,600. So there is decrease in the inventories, and decrease in the inventories are, as you all know students, decrease in the inventories are credit, which credit is for how much? For 2,600, right? Credit is for 2,600. Now students, this is the process of journalizing and how we journalize it. I hope the concept of FIFO is clear to all of you, with the preparing the chart or a schedule for it. At the same time, how we are going to journalize it. And keep it in your mind that this journalizing is with the perpetual approach. It means on the date which there is sales on that specific time period, we are going to journalize it as well. So students, after completion of the FIFO method that we have journalized it, now we are moving to the financial statements. Financial statement means that what is the impact of FIFO method or inventory costing in the different financial statements. The first effect or impact is on the income statement, and second one is on the balance sheet. As you all know about it, that income statement is presentation about the revenue and expenses of a business or an organization. So usually students, in the income statement you will find the revenue and expenses, and in the revenue, after the revenue we have the cost of goods sold. Cost of goods sold, what does it mean? The amount of money which you have paid for acquiring of a product, that is called as cost. The amount of money which you have paid for acquiring of an inventory, that is called as cost of it. So students, here the total cost of goods sold, let me tell you that how much is the total cost of goods sold, so you can add it from here, that how much is the total cost of goods sold. Cost of goods sold in the 14th August, it was 1,900, let me add it, 1,970. You also should add this, students, do not forget, plus. And again, cost of goods sold on August 31st, it was 2,600. So the total cost of goods sold is 4,570. So I will write this here, 4,570. 4,570. This is the cost of goods sold. It means, students, this is how we show it in the income statement. And inshallah, once we are going to discuss about the income statement and how to prepare it in details, we will discuss about the different elements and other components of income statement, which one of them is cost of goods sold. So students, coming to the second financial statement, which that is balance sheet. As you all know, that that balance sheet shows the financial position of a business or an organization. So in the balance sheet, there are three components or three elements, which the first one is assets, second one is liabilities, and the last one is capital. In the column of assets, under the current assets, you will find the inventory. Now students, let me tell you that this inventory, from where it comes, this is the inventory, 1,420, right? This is the ending inventory. Now this 1,420, the business or organization will show it in its balance sheet, 1,420. Now this is the amount which they show it in the balance sheet. So students, this is the effect or impact of it on the different financial statements. and what is the impact of inventory costing on the financial statement. These are, students, just the samples. Inshallah, the complete income statement and balance sheet in the next videos and in the next classes we will discuss about it. So students, please do not forget to subscribe my YouTube channel. My name is Zadiallah Haidari, that you can search on the YouTube and you will get it. And please on the notification bell for the new videos, for the updates. And thank you so much for your attention. Have a nice time. Thank you so much.